Hey everybody, Boris speaking at Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar, November 26th, November 30th, 2018. The story in the com dollars this week, of course, was the story of failure. Failure to take out the fresh highs and a big retrace. But a retrace still very much towards support levels, and especially with Aussie Kiwi still looking relatively bid. Dollar CAD, very different story. The huge pressure from the downside slide in oil is certainly weighing on the pair right now. And it went from being the absolute strongest of the com dollars to now being the absolute weakest in a massive, massive turn. So we'll be watching it very, very carefully. Right now, the levels have backed off. The levels kind of come down to 73.72 in the Aussie, 69.67 in the Kiwi, and dollar CAD now is at 31.33 level, threatening to possibly take out the 33 over the next couple days in the future. The calendar this week, relatively quiet. We do have a little bit of Kiwi data. We have exports and imports. We have a little bit of Kiwi speak and Aussie speak. There's going to be RBNZ governor and RBA governor talking. And aside from that, not much on the com dollar front in the Antipodeans. We do have the most important piece of data, actually, I think, across all of the commodity universe, or just all of the currency universe right now, is going to be the GDP data for Canada on Friday. We're a little bit bearish that, so that sort of goes to the idea that dollar CAD looks to be more bid than it is offered at this point. Aside from that, that's pretty much it. There isn't much on the calendar. It's a very, very quiet week, post-holiday week. Really, all of the major economic releases are going to flood the market the week following. So when we look at the charts right now, I think the key thing that really pops out at you is on the dollar CAD chart, for example, is just how well it's bid. Look, it's really respecting the 20-period SMA, really holding bid, and until proven. I mean, I would, proven otherwise means that we take out the lows over here, which is 31.84. Yeah, so maybe stop at around 31.70 would be. I'm going to let the sirens go by for just 1 second. Stop at 31.70. With a market entry, probably buys you a pretty decent position here, because dollar CAD looks still very, very relatively bid. We've had it did its usual one step forward, 2 steps backwards, but now it's consolidating at a 20-period SMA, and this just massive destruction in oil continues to, I think, really haunt the pair. So combination of that plus the fact that overall economic data from the region starts to really falter a little bit. The Bank of Canada is certainly going to be a lot more cautious, especially if the Fed is not going to raise rates. The Bank of Canada is certainly not going to raise rates behind it. All of that creates kind of a very positive flow still for the pair, and technically it still remains very much a in trend to the upside. So the next level would be 33, and of course a takeout of this most recent high at around 33s really opens up the path towards a 34 run. Which is something nobody expected at the beginning of October, when we were really trading 27s, 28s. Aussie dollar, on the other hand, also looking modestly bid. Not as if Caddy is weak, Aussie is nowhere near as weak, but it did have a big trade-off this week. We could not hold that run towards the 74s. We gave up the 73s. Now the key question is, can we hold the 72s? That to me now becomes the really big support here, right? Or 71.70 if you really want to look at a horizontal support. We are holding 20-period SMA, but 71.70, that's the key support here. We break that, I think that goes right back towards a test of the 7100s. But as long as we can keep bid here, the chance for a re-rally back up towards the 73 level looks pretty good. We are making a very, very long-term W bottom in the Aussie, and that structure doesn't get violated until and unless we take out the 70.50s. So even if we take out the 71.70s, it's still essentially a bottoming out formation, but albeit much weaker than it was before. So I still like this to the upside. It's a very, very slow trade. I think ultimately, really the story in the Aussie is that it stays stationary and everybody else dances around it. But on a relative basis, it still looks to be a relative bid trade for the time being, although very, hardly a blazing buy at this point. Kiwi dollar, after just an impressive 2 and a half week run really kind of ran into massive resist here and seeing some short covering. Still hasn't come down all the way to its 20 period SMA, so there's maybe more to the downside here. And in fact, there could be an Aussie Kiwi adjustment here, where we are still trading Kiwi to the downside, Aussie to the upside as we go forward. We'll take a look at the crosses in just one second. But overall, just a very, very tight, low volatility trade as we see here, and still showing kind of a modicum of support, and that's really the key thing. I think the commodities are clearly more bid than the majors at this point, but they're not driven by any kind of big story cycle here. And they're just coming off a very, very strong upsurge over the last couple of weeks. So unless we see a serious upturn in the dollar, unless we see the dollar like sort of rising, the yields in the U.S. start to really pick up, and there's a renewed belief in U.S. growth, I think these trades are still very much buys. Especially as we get into relatively value propositions around the 20-period SMAs, you don't have nearly as much risk here. So bottom line is, if we can buy them around 67.70, 67.50 with a 66, probably I would say horizontally it's really 67 that is really the key support area, and the next area after that would be 66.50. If we can buy those with those stops, it should be a pretty decent chance for a bounce back over the next couple of days. That's how the COM dollars shape up. Wish you guys the best of luck, the best trading. Boris Schlossberg, over and out.